All right, guys, welcome to the second podcast here, Kings of Lending podcast. Got Naomi back here in the hot driver's seat. Super excited, and we're going to talk about the newest, the newest thing that a lot of people are wanting to do nowadays. Is called the soft check, right?
Woohoo!
Soft credit pull. Soft credit pulls allow people to check out their credit score without having to, get a hard inquiry. So it helps people know what the numbers look like before getting into escrow.
Amazing. So let's say potentially I'm a new home buyer. I'm trying to get a home. What if my credit score is as low as 500? Would I qualify?
Well, if your credit score is as low as 500, there's definitely different things we can help to improve it. So that way you get a better interest rate. But the best part about 500 FICO score is that we could still look to get you a loan.
Amazing. So let me put it this way one more time. If my credit score is as low as 500 and I would like to check if I qualify for home, you guys will do a soft pull,
which means that your credit score wouldn't be affected. So it doesn't adversely hurt you. What it does, it gives you autonomy to know exactly where you stand in terms of FICO, and it actually positions you to purchase a home when the time comes. So soft credit checks is the best for you if you're looking to run the numbers and see what you're approved for.
amazing. So I heard many people more it's qualifying now. The market is getting a little bit crazy. You guys are very busy. Tell me a little bit more about it.
Markets are moving fast, and we are moving fast as well. So if I can't get back to everybody's texts, I do apologize. We do work better on emails. No, I'm just kidding. But really, markets are moving fast. We got to make sure that, if rates drop sooner than later, you want to be in a position that you already are pre-approved, because it's not about locking a rate before you find the home. You got to find the home. And if the market develops for the better, like interest rates come back down 1 week, then we can lock your loan, because
It's
you
making more
can't you
sense.
can't you can't prepare for a low rate when the markets move, like a stock market. You know, Shares drop, you get a good deal on a stock, you buy it that day. You can't do the same when you're not pre-approved or you're not looking for a home. So you got to get into the process, get into the wheelhouse, and then once it comes time to make an offer on a home, then you could lock the rate once you are in contract, because then you'd be paying debt on an asset that you have secured.
So could you tell me a little bit more about how do you lock the rate, a myth and a fact about that? Obviously, we know that they can choose the rate, but also we know that the rates fluctuate daily. So how do you do that, and how do you know when to lock it?
Well, we have a team of people that we look at before locking an interest rate. So that's one benefit working with us, because anybody can lock a rate on any given day, but is it a good time to lock on that specific day?
Exactly.
So that's where we look at the markets to determine whether or not the mortgage-backed securities are going to improve in the future. How does the trends look? And more importantly, is it a better time to float the rate as opposed to lock the rate? And that's just risk tolerance. And depending on who you are, an investor or a first-time home buyer, you could decide.
What is your advice for a new loan officers that they're just starting and they have to figure out how to lock the rate? What would you advise them in that?
As a new loan officer, you would have to have, right, some sort of supervisor, branch manager, division manager to overlook your files. And depending on the day you lock, right, probably not the best day to lock on a Friday.
Why is that?
Well, most people are off on Fridays. Big traders, investors, they're usually off for the weekend. So markets are already moved on Thursday and usually picking up traction on Monday. So it really depends. Best practice, we don't lock on Fridays. We usually just float unless there's some big development happening on a Monday that we may want to lock before a reprice, and for the worst.
Interesting. What would you say? Like, why so many people it's applying now to buy a home, and what's the difference between now and let's say 2 months ago?
Well, 2 months ago we had the holidays. We came into a new year, so if you were buying a home in the holiday season, you, one, most likely got a great deal, and two, you probably got a good rate as well.
Since then, the rates went up or down, or we are stable?
Well, since then, the rates kind of went back up. Rates are floating right now. They're stable. I mean, who knows what could happen next week, but you know.
What do you think about theory that the market gonna crash? Do you see that, or do you think it's not gonna crash?
I think people are going to believe whatever they're going to want to believe. And if it's something that they believe is going to go down over time, then that's their decision. Do I have a biased thesis of how the markets are moving? Of course. I'm a professional that is in the space that are writing these loans every day and speaking to, you know, tens, 20s, 30 agents a day. And they're telling me their pros, their cons, what they're seeing in the markets because they're in the fields as well. So as a professional, when people ask me, "Hey, we're not going to buy because the market's going to crash," we want to know where they got their data from, right? And if it's not more than three sources of valuable data resources, then you may want to reconsider who you're talking to. Is it your uncle? Is it your uncle, that is renting, or is it somebody else that has never bought a home? And then you'll want to do your own research thereafter.
Exactly. Is it a professional you are dealing with, right?
Yeah. Soft credit pulls though. If you're not, if you are looking to buy a home, do not do a hard credit check.
Why is that? Explain.
Because if you're not looking to buy a home, but if you are looking to buy, people want to do a soft credit check just to see where they're at. You don't have to buy a home just yet. Just know where you're at,
Exactly.
right? But if you are looking to buy a home, still do it because
Exactly.
you could still check your credit, see where you're at.
Yeah, you can understand your decision of today to make a correct steps for tomorrow.
Correct.
Right?
Yeah, and know what the numbers look like. So if you are working with a bank or a mortgage broker that could give you a soft credit check, why not? Why not run the numbers so then you can better your life and you could actually prepare yourself if it's 6, 12 months down the road, what the finances look like for you with no recourse. Why not?
So, a question. I saw this meme recently on Instagram, and it was like a woman pulling her hair out, and the meme was saying, when you work with bank that you give you a mortgage loan, and the bank is closed on the weekends, and you buy home, your closing is on the weekend. Can you tell me about how does work? Do you guys work 7 days? Do you work weekends? Do you work week? Why some banks don't work on the weekends and then transactions are made this time?
Yeah, so we're in terms of, closings, we have loan signings on the weekends. Escrows are open on the weekends. The banks particularly, are not open on the weekends because of the Federal Reserve. They're Monday through Friday. And the depositories like wires going in and out, that's weekday stuff. But most loan originators, if they're not working for the bank, they're most likely working on the weekends too, if they are referral based, right? If they work with real estate agents, because let's face it, real estate agents need our help more than ever because of the financing. It's so creative that we have to get into the weeds with everybody and know how to create a financial strategy where they can win when it comes time to submitting an offer. And if the loan officer is not available to write that offer, one, that agent has a less of an upper hand with getting their offer accepted, and two, the buyer's not going to commit to writing an offer on the contract on a Sunday night if they can't get a hold of their loan officer earlier that day. And of course, we have scheduled times and we prepare and plan for these moments to happen. So it's not just like, hey, you're going to call me on a Sunday night. No, we have that scheduled because if that's the home you guys truly love and you guys want to write an offer, we're there for you.
So it's a tough job, right? You are working 7 days a week pretty much. Yes? You like what you're doing?
Oh, yeah.
Do you enjoy it?
Oh, yeah.
Even the bad times and stress times?
No? Who does?
Yes, but I guess you are passionate about it, right?
Oh, yeah.
You forget very fast the stress.
It comes with the territory. A lot of people, they run away from fear, stress. For us, we enjoy it because it's something where if I'm not going to do it, who will do it? So if I can't figure the scenario out, it just makes me a lot stronger because one, maybe someone might not be able to figure the same situation that I can, and maybe they can.
Exactly.
But it gives us a little bit more of an edge for the ones that want to win.
And help people, right?
course.
Helping people, helping Americans to make their dreams come true, have a home, and where they can live with their family, right?
Totally.
So let's talk about opportunities. How do you see opportunities for buyers right now on this market
Opportunities. Well,
to invest?
depends where you want to live. I think the first thing we want to set up for people that are looking to either A, relocate, or B, live in their same market is that, do you enjoy where you're living? And if you're not, let's find out why. Is it because of the weather? Is it because of the cost of living? Or perhaps is it because of family? Or you just want to just be more, you know, just
Free.
spontaneous. So
So,
like for when I this is a question actually asked, and I'm glad you brought this up, is that if you are curious to live anywhere else, you want to find out what that cost is in that area. Is it a low cost area? Is it affordable area? You want to go there and you want to travel and visit. 'Cause you can't make a
Exactly.
decision based off of just seeing things on Instagram.
So let's
Go ahead.
talk a little bit about California. It's a very interesting state. Obviously, you know, it's the real estate is one of the most expensive in United States, and there's a lot of people who want to live here. So how about ADU, and how can we convert those garages into spaces for living?
Well, an ADU is otherwise known as an accessory dwelling unit. And
Okay.
it could be attached to your property, it could be detached, it could also be within the garage confines, what you just said. So like anybody can convert it as long as you're permitted. So state of California, they're encouraging more people to do conversions, right?
Why is
Or
that?
because there's too many people living in California.
Exactly. Okay.
So you got to ask yourself, why is the cost of living in California going up? And the question is that because of the housing? If there's a lack of inventory and builders are not building, where are people going to live?
Exactly.
So if California is saying, guys, we're breaking rules here. We're going to let you guys build and incentivize you, especially off of ADU grants that they were giving for people with area median incomes below a certain threshold, and you qualify for a $50,000 grant, like that's something that you could take advantage of. Like, how do I know this? Because we research a lot of incentives for people to take advantage of. But those grants are there. ADUs are meant to be built so then you could also add value and you could offset like your mortgage liability with someone else's rental income. So that's where affordable housing is coming into place, and landlords are taking action.
Exactly. So this is a big opportunity for California right now, right?
Huge.
So what would you do? What would be the tactic? Tell me about it.
Well, you would first want to see if you have space to convert your garage. If it's attached garage, you could see if you could, you know, convert that garage. The second option is that depending on how much equity you have in your home, right, you would want to make sure that if you could tap into that, you can know what those numbers look like. So then you could borrow against your property and then use a budget to do renovations for a correct ADU that's going to give you value. And that way you could actually borrow money from your home, pay for the renovations, and then have somebody move in and then help pay for that new debt you'll have.
Now we're talking.
So,
That sounds like amazing opportunity for a business plan and a
yep,
good way to make money.
yep. So,
So could you tell us about construction loan? I know like most of us younger people that we are trying to buy homes and we of course would love to buy a new build, but most of the time, especially in California, the new build we can buy it's somewhere far away where for sure we don't want to live. So I know the solution for
true.
that would be a construction loan. What's the best strategy and how that works?
Great question. So, two things. Are we looking at a new build home community or actual one off custom built construction loan? And there's two different types. So, a lot of people will navigate to the new builders like your Lennars, Richard American Homes, Mason. So, like, there's so many different types of builders out there that you can live in a master plan and have a new home, which is great. But if you want to take it one step farther and get creative and build a custom home that you get to call the shots on, and perhaps it might be more affordable, then you could build your own home with a one-time construction loan. And those loans, as a primary residence, they go as low as 5% down as long as you qualify on income.
Wow, amazing. What a great solution.
Yeah, and it also puts a little bit of, uh, you know, flavor, I guess people would say, to their own type of home that they're wanting to build. Like, I hear one thing that a lot of people don't like is that if they live in a master plan and they are pre-approved for a certain dollar figure, that they're kind of at the helm of only purchasing that type of property if it's a townhome because of their purchasing power. And if they wanted to purchase the nicer home or the different home that's like a single family home in the master plan, it's out of their budget. So with those builders, they're kind of just they're stuck. So what if there was a way for them to get more creative with financing and for them to build their dream home for the same cost as the more affordable option with the builder? And that's where we do the one-time construction.
I love it. Great solution.
Totally, yeah. And it also gives, it puts you in a position where if you did find land in an area, because that's really it, you got to find the land. As long as you could find the land, then we could build on it. And the one-time construction loan is fascinating is that we can use the land a part of the construction build. So if like you see land online or Zillow and you see it for like $100,000, you're like itching to build a dream home. Like, how can I do that? So I got to buy the land first, 100,000, and then get a loan out for the extra 500,000 to build. No, that's not the case. We will finance the land and the budget. If the land's 100,000, the budget to build is 500. We lend off of that $600,000 value. And so if you qualify at 5% down at 600,000, that means that you come in with, only 5% down for the whole purchase, which is fantastic.
Amazing.
Yeah.
I don't think a lot of people is aware of that.
No, they're not. It's very,
Amazing.
very underutilized and it should be more common. But the crazy part about this is that no one's talking about it. And they can take advantage and don't have to go directly to a builder and pay exorbitant fees and high costs for all these premiums. And maybe, the custom bath that you want is just one of those plastic cutout bathtubs and everything's all the same. And, you can build your own.
What would be your advice? Should we rather invest in apartments or in homes? Should those homes be with HOA or without HOA? What is the best investment in your eyes today?
Well, of course, it really depends on your appetite. If you like to have, your grass mowed and making sure that your, outside your walls is taken care of. So like roofing stuff, you want certainty to live in an HOA community. Most investors, if they're looking at multifamily homes and they're looking to, get a mortgage on those homes, the great part about an HOA is that if you are with an HOA on a multifamily home, they cover everything outside of the house. So
Less stress.
less stress. HOA will take care of it.
But isn't it with HOA like that they can actually also raise their rate every year? Let's say today I'm paying $100 and next year the roof gonna go down and then we have to pay $600. Is that true?
The HOA has control of the association dues, and they have to get their committee to approve any sort of increase. But yeah, they have control. So that's also the
Downside.
the downside to living in an HOA. Yeah, they take care of stuff. Like you live in an HOA and like you're going home and they're redoing the roads again. Like, oh, that's where my money is going, to new roads. Or they're trimming the trees again for the 5th time this week. Like, what are you guys doing? That's what a HOA does. They
OCD.
I don't know what they do, but that's what they do. And then if you don't live in an HOA, then you're responsible for those things. Like not obviously doing the roads. The city would take care of that if there was issues there, but like trimming the trees outside your front yard. You may have a neighbor that just doesn't keep up with their property. And, they may get served by the city to like, hey, it's time to mow your grass. It's like 10 feet tall, because
Exactly. It's
you'll
happened
get
to me in the past,
you'll get
actually.
served. Yeah. Oh, has it?
Yeah, it did. It
Really?
did. I wasn't aware since I came from overseas, and I didn't understand that there's have to cut my grass, and I was like so surprised. Why these neighbors are so mean? What's going on?
Gotta cut your grass. The HOA didn't cut your grass.
Actually, I don't know. I just got a note. I got served that my front of the home it's not being proper organized, and I have to take care of it.
Okay. Funny.
I was
That'll happen to you.
surprised too.
That'll happen to you.
Okay, so talking about investments, what do you think, in your opinion, it's now the best investment looking into properties? Which market is the hottest? Which state is the hottest? What do you personally think or believe, or what properties you would go after if you were buying today?
Well, it depends if you're looking, multifamily, single family condo. Really, it depends. For me, I would love to have more multifamily homes.
Yes, why is that? Why they call them cash cows and how that works?
Yeah. So anything under 4 units, considered residential. 4 unit home, they provide stability and rental income. Right. So like if you get a mortgage on a fourplex 4 unit property, you're paying one mortgage and then you have 4 people paying the debt for you. So as long as you're making money on having people live in that home, that's a great investment. Right.
So basically, we will rent with fourplex. We just rent other 3 spaces, and then they pay fully mortgage, and then we just live in one unit.
Right. And it just depends what the mortgage is, right? So like depending if your mortgage is $5,000 a month and the rents are $1,000 each and you're living in one of the units, that means 3 people are paying 1,000 each in this scenario. And then say the mortgage is 5,000. So 1, 2, 3, and then you pay 4, technically 5. So you pay $2,000 a month to live, and then they all pay the 3,000 to satisfy the debt on a monthly basis. For
What's the
2005.
options for mortgages, for investments like that? Is there only one mortgage loan you can take, or is there multiple options you can choose from buying a property like that?
Sure. There's your primary, as if you're going to live in one of the units, you could secure financing as a primary residence, and then you get a mortgage on it. That's one way, probably the
Okay.
most affordable way. The second way is to get an investment loan, and it's the same as a primary. It's just a different rate, different collateral, so different down payment.
Is it way higher?
Yeah,
How much higher?
it depends. It
Individual,
depends.
right?
It depends. Yeah. So you're looking at anywhere from 15 to 20, 25% down.
Okay, what's the other options?
5% down or 3.5% down.
Okay. So I understand there's plenty of options if we will try to buy duplex like that. You have plenty of options for buyers with mortgage.
Yeah.
Okay, awesome.
Yeah. So it really depends. And that's why it's great to sit down and go over a game plan. And then if you're looking to buy a multifamily home, can you buy as a primary? Right? Buy as a primary, live in it for 12 months, and then rent the second unit after 12 months? Sacrifice.
For buyers that, let's say, they live in California, but they would like to purchase in different states, is this way more complicated coming to the mortgage, that different states have different laws? Is it working the same way? Like, how does the process look like buying in different state?
Depending if you currently own a property, I'm going to say yes, you do own a property right now, and you're looking to buy an investment property in a different state. What we do is we qualify the investment property off of the long-term rents that the
Okay.
property generates to qualify for the payment. So like we order an appraisal survey of what the rents look like. And then we also consider any current rents are on the property. So if there's leases in place, people are living there and they're paying rent, then we're going to want to find out what that actually looks like. And then we're going to compare it to what loan you're going to take out. What's your payment going to be after your principal, interest, taxes, and homeowners insurance? We want to know what that payment looks like. And if the rents cover that and a debt services, that means we could qualify the mortgage without any tax returns, bank statements to qualify. Of course, we need to see assets. So for down payment, we're going to want to see your down payment.
So what role it's playing appraisal in buying home?
Appraiser, they just come out there and they work off of the bank's behalf. The bank wants to know, is a property lendable? Is there anything that they're, on this property that's going to devalue once we unpack and see a report from it? Like we want to make sure that it's actually a value of what the buyers are buying it for, right? If it's overinflated, the appraiser's going to say, no, like I don't know why you guys are buying it for this amount of money based on the comparables in the area that are like it.
It's not worth as much.
They would determine what would the value be. So then the bank would give you money to secure financing on it.
What if appraiser come higher?
That's great. That means you have equity. You walk into equity. And the
Amazing.
equity is not realized. Your equity, even though like if you get a $20,000 over your sales price, buy a home for $500,000, you're in contract at $500,000. The appraisal comes in at $520,000. Right, we're celebrating. You're not paying money on 520. You're paying money on 500 because that's the sales contract. So the bank lends off the lesser of the two values. So if the value is lower, which is a sales price, we go off that value.
Amazing.
And then the extra 20,000, well, that is exactly what the market's going for. So later down the road, if you sell your home, let's just say 6 months later, the profit of the equity can be realized as long as they're willing, a buyer is going to buy at the higher price. So it just says that, the appraiser just saying, hey, the value is actually worth this amount. So you're getting a good deal up front, but the equity doesn't get realized until you sell the home and you have somebody that comes in and wants to buy it for that price.
I understand. What do you think it's smart based on taxes and based on different, I forget the word.
Taxes?
Based on when would be smart to sell a home after purchasing it? What's the minimum time it will make the most sense for me to sell my home after I bought it?
Why do you think you'd want to sell the home? Give me an example.
Let's say I bought it as an investment. I bought it, I renovated it, maybe I lived there for a little bit, now I'm moving and I need to liquidate my cash, or I understood that I gained the value with the appraisal, let's say $50,000. After a few months or 1 year or 2 years, I'm ready to move. How long I should keep this property before selling it for me to make sense?
You'd want to, speak to a really good tax consultant, somebody that knows tax strategy. You want to have a conversation with a mortgage professional before making that decision with a realtor. Because if you're selling your home before 2 years, you are within a realm of having to pay capital gains tax.
Okay.
Unless you are, you're selling before 2 years, you would incur capital gains tax. Depending if you're married or single, there's a number that goes to that. So, like, you want to talk to people that, what are you doing, and can we wait?
Okay, so typically it's minimum 2 years.
Typically 2 years, yeah.
Wow.
It's 2 years, yeah.
Okay, that's good to know. I think that's a very valuable.
So if you need to sell your home, like, why is it? You need cash? Okay, like, can we look at other alternatives so you're not getting penalized on these capital gains taxes? So, like, that's where people do lines of credit. They'll borrow from their home, or they'll take some equity out, like I mentioned, like a line of credit to buy another home, and then have someone rent the property that you're living in.
So could you tell me more about this one? Because that's very interesting how people actually are able to cash out, pull the money out from the home and then reinvest into another property. How that works?
Yeah. So we just apply for a home loan. We go online, we fill up, 5-10 minute portal online, and then we set up a time to go over the numbers depending on what you're looking to do, buy a home or refinance. And then if you're looking for a line of credit, we want to know how much you're looking for. And then we would determine the home value with what we call a CDA, collateral desktop analysis. And that collateral desktop analysis or automated valuation model, AVM, determines what the home value is on the property compared to other homes. So we don't have to do an appraisal. That's one way we could determine the value of the home. And then based on the existing mortgage on the home, we could go up to what we call a CLTV. And that stands for combined loan to value. So based on your loan and your sales price, we go up to a certain number of the valuation of the home. And that's the amount of money you could borrow. Then we would find out what that payment would look like. And then, like I mentioned, running the numbers, you want to make sure you could afford the payment. And then you take that money out and reinvest it. That's the goal. Yeah.
Amazing.
Super amazing.
It sounds like there is a lot of opportunities nowadays for investments into properties, and there's so many loans and options. Was it like that 20 years ago, or over time did it change?
For loan products, there's so many different loan products now that we have access to. More creative loans, more loans that are secured, more loans that are, that are protecting you as a borrower. These loans that you're getting yourself into depends, is it 30-year fixed mortgage? Is it adjustable rate mortgage? How many times will that adjustable rate mortgage adjust in the time frame that you had the home loan? So it really just depends on your risk tolerance too, because no one's just getting qualified because they want a loan. Everyone has to apply. So, nowadays there's so many different creative loans for every type of walk of life, whether you're self-employed or if you have a W-2 wage earner. Go ahead.
Which one is your favorite
My favorite loan?
product? Yeah.
Well, I would say the VA loan.
Okay. Why is that?
Yeah, because people can come in with 0% down,
Amazing.
and there's no mortgage insurance on that loan.
Also, wow, amazing. So
And
that means lower monthly payment, right?
Well, no, not necessarily. But great, it's with 0 down, you're financing the whole sales price. So with people having to put 5% down normally, they're financing less money because they're putting money down. So you're borrowing less money. So the payment's technically cheaper. But in most cases, that's not always true because the veterans loan, the VA loan, they don't have mortgage insurance. And that's where like FHA loans, conventional loans, if you're putting less than, if you're putting 3% to 5% down, you still have mortgage insurance.
So this mortgage insurance, is it one-time payment or is it in monthly cost?
There's several different types of mortgage insurance policies out there. The most common policy that you're going to see is a monthly mortgage insurance premium. That's where you pay it on a monthly basis. Now there's my favorite, which is a strategy where you work with us. We could look to use the MI Buster. That's called a single paid premium mortgage insurance, where the mortgage insurance policy will be rolled into your loan, so you don't have to pay on a monthly basis. And 2, it could be paid out up front. So that means the one-time policy could be paid at closing, and we typically get a seller to pay for that. So that way you can walk into the property and feel like you're putting 20% down with only putting 10 or 5%.
Amazing.
Yeah, but to segue back to the VA loan, like the reason why I like the VA loan so much, because it gets so much flexibility for clients that are looking to buy multifamily homes. Multifamily homes like fourplex. One reason is that you don't have to pass what we call a self-sufficiency test, whereas FHA, any unit 3 to 4 units, FHA loans, they have a self-sufficiency test, and that not a lot of loan officers know about, or they don't know how to calculate because they hear, buy a home with 3.5% down. Okay, that sounds great and all, but the self-sufficiency states that if your mortgage payment has to be 75% less than the gross total rents that property generates, and if it's not equal or greater than that, then you don't qualify. So like, let's just say like, you had $4,000 of rents, 75% of that you could only use to qualify, and your mortgage payment has to be exactly that. And if it's not, then you don't qualify. VA, you don't have a self-sufficiency test.
Amazing.
Conventional, they don't have it either, but typically you got to put 5% down now. So 0% down VA, no mortgage insurance. I mean, come on.
Yeah, that sounds like a really, really amazing deal.
You're doing really well.
Yes. Thank you so much for coming to today's podcast. It was a pleasure to see you again.
Awesome.